Hello everyone. Today I'm going to present my analysis of Danaher Corporation, traded on the New York Stock Exchange under the ticker symbol DHR. Danaher is a global science and technology innovator with a focus on life sciences, diagnostics, and environmental solutions. In this presentation, I'll go over the company's financial structure, SWOT analysis, competitive position, growth metrics, and business model. Start with the fiscal year 2024 income statement flow. Danaher's revenue comes mainly from three segments. Biotechnology generated $6.759 billion, showing a year-over-year decrease. Life sciences produced $7.329 billion, with slightly growth. Diagnostics contributed $9.787 billion, also with small growth. Altogether, revenue reached $23.875 billion. From this, the company had a gross profit of $14.206 billion, and after operating expenses, an operating profit of $4.863 billion. The final net earnings were $3.899 billion. After accounting for taxes, interests, and other costs. This flow shows how each part of the business contributes to the bottom line. Now let's look at the SWOT analysis. In terms of strengths, Danaher has a strong brand, a diverse product portfolio, and a global presence. It invests heavily in research and development and has strong relationships with customers in healthcare and scientific industries. Weaknesses include high operating costs and dependency on certain markets. For opportunities, there is room to grow in emerging markets, to expand digital and automation solutions, and to benefit from the rising demand for healthcare and diagnostics. Threats include strong competition, regulatory changes, and global economic uncertainties. Here is a short company overview. Danaher designs, manufactures, and markets professional, medical, industrial, and commercial products and services. Pros include strong innovation, a stable customer base, and steady financial growth. Cons include market dependency and high costs. The stock price has been relatively strong, supported by a steady market capitalization and a reasonable price-to-earnings ratio compared to the competitors. When we compare Danaher to competitors like Abbott, Thermo Fisher, and Agilent, we can see differences in market cap, stock price, and PE ratios. Thermo Fisher has a higher market cap, but Danaher maintains a solid competitive position with efficient operations and consistent revenue growth. Next, let's look at growth metrics. Danaher's compounded sales growth and profit growth have been steady over the past years, showing resilience. Stock price compound annual growth rate also reflects recent declines, and return on equity has been consistent, indicating efficient use of shareholder investments. Finally, this diagram shows Danaher's business model. The company's platform connects with researchers, biopharma companies, industry solutions, and academic institutions. This ecosystem allows for continuous innovation, product improvement, and customer engagement. Danaher's model emphasizes collaboration and adaptation to meet customer needs in fast-changing scientific and medical markets. In summary, Danaher is a strong player in the life sciences and diagnostics industries, with solid financials, a diverse portfolio, and a competitive position. However, it must manage costs and adapt to changing regulations and competition. Thank you for listening to my presentation.